Hello, everyone, and welcome to another edition of the Forex Technical Market Update. Okay, now what we have in front of us is a chart of the British pound versus the Australian dollar, and we have been focusing on this market for a number of weeks now, and following the progress of this rally. As you can recall, what we were in was a triangular consolidation pattern. The market broke roughly, this was a consolidation. The market broke out of that triangular consolidation pattern to the upside. But what has happened so far is that we have the hurdle of the $2 mark, where I said that was the initial target. The initial target was the previous high of $2 to one British pound Australian dollar. Now the market went exactly up to just a little above that $2 level and has formed a reversal candle, and we are now getting some more follow through from that reversal. So a prudent thing to have done on this, and this is what we did for our portfolio members, was to take some profits or take profits on that position. Now, just because it was rejected at this $2 level, that does not mean that the rally is over, because what you can see here is that we could be forming, and these are the old trend lines that was in the old triangle here. But what you can see is that we are forming another triangle that could be forming here. And triangles in an uptrend normally break to the upside. It doesn't happen all the time, but normally what it does is that it goes to the upside. So what we could see is further selling and a pullback in this market to somewhere around this area. And if we see a buy signal, that would be another attempt to get on board for the market to rally and possibly take out the $2 mark. If that doesn't happen and we see that the market closes below this 190 level or even below the 188 level, that will signal a full reversal in this market. And looking on the weekly chart, and just let me just compress it more. This level here, and this is some long range projections. This level here is just above the 0.38 retracement level, Fibonacci retracement level, from this high all the way up at 270 to the low that was made down at the 140 region. So that could mean the end of this corrective phase in this pair here, but that's longer term. So what we're looking for in the near term is to see how the market reacts around this triangle and these trend lines, because failing at the previous high is fairly common, and what you could see is that the market quickly turns around and rallies, and the rally would be fairly powerful. So the prudent thing to do was to take some profits on the position, as we did with our portfolio for our members, and look for a re-entry if the market gives us that opportunity. Okay, taking a look at the euro, and the rally has, or the decline in the euro has ended, and we are currently rallying slightly. Now the question is this a corrective rally, or will this market ultimately take out this previous high just above this 114, just below 115, or will the market stall around and continue to the downside? And that is definitely something we have to wait and see, to see how the market reacts to these Fibonacci retracement levels, because currently it's at the 618 retracement level and also at the weekly R3 pivot point resistance, and that is providing some resistance in the market. But what was our concern was that this rally or this decline did not go down further. This decline did not go down further and take out some of these lows. So the market is kind of in no man's land at this point with regards to the euro. Taking a look at the USD versus the Japanese yen, the rally continues, and it is tempting for traders when the market is rallying like this to say that the market cannot go any higher and attempt to find short opportunities. I can tell you from personal experience that I have lost a lot of money trying to short markets that are in such a heavy uptrend. So if you want to get aboard this rally, the best thing I will suggest is for you to buy dips in this market and not trying to sell the rally, because this market, just take a look at this market over the last, since 2012, this market has been in a fairly strong uptrend, and as you can see, the shorts have had some periods of success, but the market broadly has just been going up and up and up. So it's better to be on the long side of this market as opposed to be on the short side. That's just my suggestion. We are up on some new highs here, and to see where we could get resistance, we have to look at the monthly chart. And what you can see is that we are currently trading at or slightly above a swing high that was made in all the way back in 2007, and that high was at the 124.15, and we're trading slightly above 124.15 at this moment. And that's why sometimes it's very important to look at the broader chart, look at the higher level charts to see what is happening in the markets. Okay, so that is the USD Japanese yen, and it will be interesting to see if we get further follow through buying at this level or the market will turn around. Okay, another market of interest is looking at this market is Australian dollar, where the market came down to the previous area of support near the 76 level and has turned around slightly. And what you can see here, just draw a rough line through these areas of support. And what you can see here is that we could be entering another triangular consolidation pattern in the Australian dollar. So that's something we need to keep an eye out on for these trend lines here coming to the downside. Because what happens, and it's the same thing with the British pound, Australian dollar, sometimes is that the market approaches the previous low, bounces up, and then continues and then goes down. So that is definitely something you need to keep in mind. Okay, thank you very much for listening, and we will be back tomorrow with some more Forex analysis and really how to make money in these markets. You have to pay attention to what's happening every day. If you make the habit of looking at what's happening in the markets every day, you will see that you will start to become better and better at analysis and spotting opportunities. If you want to have these signals sent to your brokerage account automatically, what you can do is sign up on the link below. And that trading program, I know a lot of folks say they can trade, etc., etc. But what our program does is that if you don't make money after 12 months with us, you get a complete refund. And that is the confidence I have in the program actually succeeding. So click on the link below, and I will welcome all new members and have a very good trading day. Thank you.